Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hey everybody, welcome to today's recap video. We've got a lot to go over, so let's go ahead and jump right into it. We had three moving averages we really had to contend with today, and that was the 5-day moving average, the 20-day moving average, and the 50-day moving average. Now, some of you may not know how I look at moving averages, but moving averages to me are about a $4 range on the daily time frame, meaning there's about $1 to $2 above, called the upper bounds, and about $1 to $2 below, called the lower bounds. So when we had the 5-day moving average today, currently at that 746.36, very likely was at that lower range of the 746. That means that we can have that expectation of the day to be around that 744 for the low if we're going to test that level, and the 748 for the high. Now, same thing with the 20-day moving average and 50-day moving average. We have an upper bounds and lower bounds. So with the 50-day, that would put the low or the upper bounds around that 756 or 746, and the 20-day around that 747. Okay, so this is going to correlate to what we're looking at here in just a few seconds. So just remember the 5-day moving average was at that 746, 36. Okay, so I'm going to show the drawings. There's going to be a lot on the screen for a moment. But with today's price action, you could see that the lower bounds of the 5 mile, basically that 746 or that 744.36, well, that was pretty much the exact low of the day. The low of the day was at 744.34. That happened in the pre-market. Open was very close to that 746.37. That's what's saying for the low of the day for me. And from that low of the day, we did pull up, obviously, towards that 750.02. Now, I'm going to go ahead and delete that, but this shows that we had basically a bounce out of that 5-day moving average, a bounce out of the 20-day moving average, and a bounce out of the 50-day moving average. Now overall that's bullish, okay, but we're still sitting between these two channels. And I showed this in yesterday's video, where we have this very well-defined selling channel, but now we start to have this very well-defined buying channel, okay? And inside that buying channel here, we have this cup and handle formed. And from that cup and handle, we can get additional bullish structure. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. Now we're at a really important range here, because from that potential bullish structure, we kind of have this diamond formed. And that means that either we're going to break through this selling channel and start heading upward into this buying channel, or we're going to have a breakdown and continue heading downward in the selling channel. So we're at a really, really important area. Now for the structure here, we have two different structures we really have to pay attention to. One, we saw this cup and handle formed. Okay, and with that cup and handle formed, we now have an additional nested cup. Okay, and nested potential handle starting to form here. So here is that cup, potentially building that handle. Now this may not look like it works as a handle, but this handle has not invalidated this cup just yet. So it is something that we have to potentially contend with. What we also have to contend with is that we did get this head and shoulders during the intraday leading into the after hours. And that head and shoulders does coincide greatly with the top of this channel. Okay, so if we are going to see continued selling, that's kind of the structure we're looking for. Now, it did not complete the cup all the way down to the bottom like we would expect. However, we have a very important and well-defined support range in here, which means that this can be an inverse cup. Okay, and if this is an inverse cup, and if we are going to continue selling off, then this can be that handle to do so, to continue pushing us downward. So that really leaves us between two ranges for tomorrow. And I want to discuss some of these resistances and supports before we go ahead and end the video. But for tomorrow, and we did break through this major resistance range today at the 749.09 because we did hit that 750.02. But from that 750.02, we actually did break below that range a little bit. So now we have a couple different resistances and supports to look at. We have this 750.53, which is going to be an upward resistance. If we're going to continue to push upward and break through this channel, then this is going to be a very, very crucial range, okay? Because potentially and historically in the past, we have had a major sell from that range. So that's something we have to look at. But we also have the 754.62 on the table for tomorrow, okay? That might seem out of range currently, but that's only about $8 from where we're currently at. That's not absolutely unreasonable. Now, we did have some bad earnings today, and I don't really think they were terrible, but currently investors are seeing increased capex spending as a negative outlook for the stock rather than a positive outlook compared to, over the last year, year and a half, where increased capex spending was something bullish. So if we continue breaking downward, and if we break through this buying channel tomorrow, which we should know by the pre-market slash early open, we have this 744.20 to contend with. Okay, and if we break down underneath that 744.20, we have the 742.61 and the 740.96. Now, do I think we could do all that in a single session? It's not unreasonable. I don't think it's going to occur that way, but we absolutely could sell down through all those support ranges. But again, remember, historically, each of these support ranges have led to a bounce to the upside. So it's something we have to contend with. If we're going to have selling, we have to crush each of those ranges to really start, or to really continue this bearish momentum. And if we do see that, then this will be a very large inverse cup. And from that inverse cup, we would expect a handle, but that's something for tomorrow's video if we do get to that type of selling. Now, I'm not going to be bearish or bullish leading into tomorrow's earning or into tomorrow's trading session. I want to see what happens with this diamond here. Okay, this is a very, very, I drew the diamond so bad. This is a very important level. Okay, and very likely we're going to see, the outcome of this by the pre-market. May not happen. We may have to see this during the intraday tomorrow. But this diamond is basically a huge battleground between the bears seeing the downside continue or the bulls breaking through the selling channel and starting to head upward. So that's going to be it for tonight's video. I hope everyone has a great trading day. Whether you listen to this tonight or tomorrow, I hope it helps. So take care, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.